Good morning, everybody. Hey, welcome to Wednesday, February 26th. As we kind of get halfway through this last week of February, I hope that your week is going well. Obviously, the markets are having a little bit of a rough time Monday and Tuesday, down a little over 6% in 2 days. Not something we've seen in quite some time as we get ready to close out the month of February, giving back all the gains we've had so far year to date, plus some, as we get ready to kind of look at where we're at. Dave and I will have a conversation about how that's going to work out. So one of the things I want to remind you folks is that, hey, if you are in that danger zone, that's 10 years prior to retirement, 10 years after retirement, any kind of misstep, any kind of sequence of return risk can be detrimental to your retirement. It's vitally important that you know how much risk you have in your current portfolio. To do that, give us a call, 863-382-0037, and schedule your no obligation financial x-ray. Let us x-ray your current portfolio to find out how much risk you really have. Hey, looking forward to our conversation today with Dave. Stand by.
5.7 Light FM, that's Pat Benatar there. Good morning. We're up to 65 degrees. It's cloudy, but the chance of rain this afternoon, darn near 85%. So take an umbrella if you're going into the office this morning. You'll thank me by the end of the day. It's time to check in and see what's going on with your money on Wall Street. Yeah, it wasn't pretty again yesterday. Let's head down to the offices of Statler Financial Services. Phillip Statler standing by this morning. I was talking to you before we went on the air, Phillip, about the time the press release came out. Said a pharmaceutical company named Moderna, we talked about it yesterday, has shipped off some test vaccines to the National Institute of Health for testing for the coronavirus. The future's kind of turned. We're just kind of looking for any hint of optimism, aren't we?
Absolutely, Dave. You know, anything that gives us a hope of getting this thing resolved and being able to move past this. I mean, everything, the headlines I'm seeing is this is here for a while. It's going to have an impact, not just on the economies that we're already seeing, but they're saying here in the United States to expect to have an impact on our economy. I'm seeing, hey, car sales, they're expecting to be down because of the coronavirus. I'm seeing downgrades in home stocks, builders, because of the coronavirus. So folks, get ready, because the fear now is that it just takes a few of those building blocks to start to fall.
Absolutely. And that's the challenge down the line, because you and I have been saying you never know which panic it is that's going to prompt the inevitable correction or recession to start. We're hoping this isn't it, but one never knows, right?
You're so right, Dave. And I'll be so happy when I can stop talking about when we think it's going to fall and start talking about when we think it's going to start going back up. I feel like I'm a pessimist, and but I really think I'm a realist, and I'm looking at where we are and thinking, okay, it's not going to take much for this thing to start to falter.
And frankly, the strategy that you preach is especially careful for an area like ours, with as many folks getting as close to retirement or in retirement as they are. Gambling on a market that looks like it's spiraling upward, like it's going out of style. Even if you're an optimist, hedging one's bet just makes sense, because, well, poster child conditions where we're at right now. We get a little bit of good news out of one of the drug makers, and we go up by 300 points. We get a few more deaths over in Italy over their infection out there, and we drop 900 points like we did yesterday. It just is an unpredictable and panicky time, isn't it?
It is, and that's kind of unfortunate, but that's what I preach all the time, is you need to be prepared, and you need to know what your exit strategy is. And 9 times out of 10, there's not an exit strategy, and that's a problem. And that concerns me when I sit down and talk to folks, is that, especially if you're in that danger zone, that 10 years prior to retirement, man, any kind of misstep here, any kind of major downturn could just really and truly mess up somebody's retirement plans.
No, without a doubt. Yesterday probably wasn't a big help. Setting the table before we get to the nitty-gritty this morning. Yesterday, the Dow fell another 879.5 points, down 3.15%. NASDAQ was down 2.75%, and the Standard & Poor's was down a little over 3% yesterday. That gets the Dow down from its peak 8.4%. We talk about those magic numbers. 5% corrections happen multiple times during a year under normal circumstances. A 10% correction is normal to happen once a year. Well, we're bumping our nose on our 10% correction level for this year. And with the guesstimates as to how long it might take to make this virus go away, I won't say I'm a pessimist, but hey, we're going to be at iffy times even if we do get down 10%, right?
Yeah, I think that's right. I mean, we've got a lot of things going on, and we've seen a lot of headlines talking about different things, and I think it's just we need to stay the course, and people need to understand that they need to have a plan in place, and if they don't have a plan in place, they need to be talking to a professional to help them put a plan in place to make sure, especially, Dave, if they're in that danger zone. That 10 years, man, I can't tell you how important it is to make sure that folks are on the right track.
No, yeah. If you're in an index fund as your primary retirement account, you're looking at having your net worth going down by 10% inside of 3 or 4 trading days. That's a scary thought, especially if you're less than 10 years away from retirement. Another indication of how volatile and how touchy we are. Things were heading down on the futures market again this morning till about the middle of the night when they issued that press release about that drug company having sent a trial vaccine to the National Institutes of Health. And all of a sudden, just optimism reigned supreme, and we went back up by 300 points. And that's an idea of how volatile we are, because just because a trial vaccine goes over, that still means the earliest possible that we could get even the trial tests would be 2 months from now, and a lot can happen during that time.
Yeah, it really can, and you're right. That becomes part of the issue, is that, you know, even if they have the drug or the vaccine there, then it's still the end of April before we start trials, and I don't know how long it takes through the trial process before they say, okay, we've got a viable vaccine, let's start producing it. Then you got production time. I've got to think it's 6 months at a minimum.
Understood. Other news on the virus before we get to specific reports. President Trump, now back on American shores, says he's going to address the country at 6 p.m. tonight. Wanted to assure everybody that, yes, he's back. He's working on it. Other things coming out, they're talking about, some of them saying, yes, we could be talking about well over a year before we get to the point of being able to kill this bug off. There were some other folks at the National Institute of Health yesterday that were saying it is behaving, because it is a relative of the influenza virus, like it could self-dissipate, but nobody knows for sure. It might turn into a seasonal bug. Nobody knows is the bottom line. And as we've said time and time again, if there's one thing that Wall Street doesn't like for the purpose of what we do, it's uncertainty, and they detest that, right?
Absolutely, they do. Hey, you know, yesterday after you and I got off the air, the consumer confidence number came in. And it was a slight miss. They expected it to be 132.5, and it came in at 130.7. So I'm sure that didn't help anything yesterday either.
Probably didn't. I mean, it's positive, but it wasn't as positive we expected. Did that include during time that we were worried about the coronavirus? Could that possibly have been affected?
You know, I don't know. I don't see the dates. I'm thinking that's probably for the last month.
I was going to say, I think it's January before the poo-poo really hit the fan for the coronavirus. Yeah. So, yeah. We do have some companies that have been reporting. Have we got any good news to buoy us up a little on that?
Well, we do have some good news. Now, how much is really buoying us up will be a different story, Dave. We've got Lowe's. You know, they beat by 3 cents a share. Revenue and same-store sales, though, fell a little short of what was forecasted. You know, they've adjusted their full-year projections a little bit down from what the estimate was, but they're still trading up today 1.2% after being down 3.5% yesterday. So trying to make a little headway back from yesterday's decline.
Cool. Couldn't remember whether they'd reported or not while we talked about Home Depot yesterday. That's both of the big box home improvement stores having decent quarters.
Yep, they did. And we have Smuckers. They came in 12 cents above estimates. Revenue was basically in line with what was forecasted. You like this, improved volumes in coffee and peanut butter. Hey, two things you got to have, right? And so, but they're trading down this morning, 1.8%. I'm not sure really what's pushing them down, but they're down a little bit this morning. We got Wendy's.
Something didn't gel, right?
There you go. I knew you'd have a pun somewhere in there, Dave.
Too easy.
Wendy's came in. They matched the street for their profit of 8 cents a share. Revenue was above what was forecasted. Same-store sales were up better than expected too, by about 1.3% more than what was expected. They are trading still down 2.4% today. This market's still going to, even though it may be up a little bit this morning, it's still going to be tough on some of these companies because there's still a lot of them that are going to be trading down just because of the way the market's acting today.
Oh, yeah.
I got to like this one. Virgin Galactic reported, I think this is their first results as a publicly traded company. They lost $73 million, which was a little worse than what was expected from that company. They're down 5% this morning.
Underperformance in their frequent flyer program, maybe?
Yeah, I'm sure you're on that list, right?
Oh, yeah.
You didn't pay your deposit yet. That's what it was.
Oh, that's it, yeah. With what they're asking, that would just about be what their shortfall was, right?
Exactly. Hey, we've got Toll Brothers reported. I think that's driving the rest of the home builders down. They missed by 4 cents a share. They were still profitable, but they're just 4 cents short of what was expected. Revenue was below forecast. Profit margins have gotten hit by lower price points. And I see that all the other guys are getting downgraded this morning also. Pulte, the KB Homes, they're all getting downgraded this morning. Toll Brothers is down almost 11%.
Wow. And that's probably those textbook cases of a sector-wide disease all of a sudden, right?
Oh, yeah, definitely. And then the last one I got is Weight Watchers, WW International. They came in 4 cents above estimates. Revenue was above forecast also. They've added a lot of subscribers. They're trading up 4.8% this morning as we get going. Oh, I do have one more. This one, okay. TJ Maxx. I don't have the stock price right off the top of my head, but they really had a good quarter. They came in about 4 or 5 cents above estimates, but substantially better than last year this same time. They increased their dividend by 13%. Their same-store sales came in at 6% increase overall versus the 3.1 that was expected. So I think what this kind of tells us, Dave, is that people are shopping, but they're being cost conscious about where they're shopping. So like companies like TJ Maxx, they benefit from that because people are on budgets and they're trying to preserve what they have and get the most they can for their dollars.
I'm kind of picking up on that trend too, because the premium price stores, Macy's being the exception the other day, have been having a little bit more of a hard time than the discounters. The off prices are doing fine. Setting the table again this morning. It was another bloodbath yesterday. 3% plus down on the Dow and the S&P, almost 3% down on the NASDAQ. It ain't pretty, and it's all related to the coronavirus in one form or another. We mentioned there was a little bit of a turn earlier this morning on some good pharmaceutical news. Where are we looking at 45 minutes before the real money gets thrown around this morning, Phillip?
Dave, we had that turn about 4 a.m., and it looked really good. A matter of fact, when I first looked a few minutes ago, the futures were up substantially. They have given up about 25% of what the gains were when we first looked, but they're still positive. We've got the Dow up 0.3%, $81 right now. The S&P 500 is up a little over 1/3%, $11.62. The NASDAQ's up a little over 0.5%, $48. So we do have everything heading green, but they're giving back. So it's going to be a little touchy at the start. We've got gold and silver both trading down. Silver's down substantially, way below the $18, down to $17.85 an ounce. That's down 1.9%. We've got gold down 0.8% to $1,635 an ounce. Crude oil, man, you got to get excited, Dave. Crude oil is down 1.1%, below $50, $49.34 a barrel right now.
I like that trend. I just don't like the circumstances forcing it downward. Do you?
No, I really don't. I wish that there was better circumstances for that being coming down.
Yeah, I'd much rather it just be genuine oversupply instead of worries about whether or not business conditions are going to be okay. Overseas markets, everything was down in Asia at the close early this morning, as you might expect. Europe kind of following suit, although Germany is kind of responding to our sense of optimism, trading up ever so slightly. They're kind of seafoam green would be about my best description this morning. Phillip, this is poster child for why stability in a retirement account matters. How do I get an X-ray report on mine with you?
Dave, they can give us a call at 863-382-0037. Folks, there's a lot of volatility. If you're close to that danger zone, give us a call. Let us walk you through our financial X-ray to determine where you are in that whole process. Catch us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, 7:30 a.m. Be there on Saturday.
All righty. By the way, I just checked the VIX. It's at 25.76 this morning. It's a little down from yesterday, but still quite a bit up from what it had been, isn't it?
Yeah, it is. It definitely is.
All righty. We'll check it tomorrow morning, Phillip. Thank you so much, and we'll see you then, all right?
All right, have a good one.
Thank you. Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Remember that first.
Is this the catalyst or not the catalyst? Nobody really knows. But what I do know is you need to have a plan in place. You need to have an income plan in place, knowing where your income's coming from. So the stock market is not the driving force of your income. Give us a call. Let's schedule your financial X-ray before we see this major market downturn. 863-382-0037. Don't wait too long. Do it right now. It's that important, folks, to get an independent set of eyes looking at your current portfolio. Have a great day. I look forward to seeing you again tomorrow.